In today's video, we will review Fed interest rate decision, CPI, PPI, PCE for third quarter of 2024, and so much more on the housing data, building permits, housing starts, new home sale, resales. My name Anna Eckstein, Naples Ultimate Luxury Group, Realty One Group MVP. Let's start. All right, let's take a look first chart, Fed interest rate decision. Happened meeting on September 18. The Fed decided to lower the interest rate by 50 BPS points this year. Now, we will have two other meetings in November and also in December. Anticipation that would be another total of 50 BPS points to be cut. Who knows if that will happen, 25 in this November, 25 in December, or they do nothing in November, but 50 in December, or 50 in November and nothing in December. Well, time to tell. So anyway, they lowered the rates, federal fund rate, and interesting enough that it really caught me by surprise because I thought that the interest rate will go down, the yield would go down, the bonds will go up, and completely actually went reverse. The yields, since the rate cut, the yields actually start going back up. The bonds sold out, and the mortgage rate actually start going back up because they are correlated with the treasury yields. So anyway, this is the chart. We can see the rate hikes, and now you can see the drop that happened on September 18. This is also a projection of the Fed. This is the previous projection. This is the current actual projections that happened after the meeting on the 18, and you can see the actual longer rates for longer. It's actually a little bit higher than previous anticipation. The current, the third year, the second year, and the first year, obviously. So this is the meeting participants and what they anticipate. So the dots, that's the people who participate in a meeting and what their rate propose and expectation would be. So you can take a pulse, take a look, what they're thinking. One person is like, oh yeah, let's just keep the rates for longer, higher for longer. Anyway, you're welcome to please pause. So we have two more meetings this year, November 6 to 7. Obviously, we will know if there's any rates cut on that. And also, we will have in December 17 and 18. So that's the two more Fed meetings this year. And then obviously, we'll go in 2025. So the inflation rate year over year and core inflation rate is been going down. Thank goodness. As now we can hopefully continue to see the fund rate reduction, and you can see that actually come in below forecast of 2.6 year over year, come in at 2.5. So that was good. It's for the August. So the next inflation data that we will have would be I believe around the 10th of October. That will be for September. So hopefully that will come in line. Tomorrow, we will have actually our unemployment data and non-farm payroll. So we'll see how that will be soft or strong. And that's, obviously all of this data, because Fed always say we are data dependent. So if the data come in very strong and continue to be inflationary, perhaps, then we will see maybe fewer rate cuts. So like I said, time will tell. So if you take a look, core inflation, they come in year over year at 3.2. Again, the Federal Reserve target is 2% inflation. Can they get there? My opinion, I think it's really tough to do. but we'll see. And as we will review in the charts, you will see unemployment data as for the August as well in it. So inflation rate month over month, you can see that it's aged by 0.2%, and the core inflation rose by 0.3%. So core inflation, that's inflation that excluded volatile items such as oil, it's actually such as food and energy. That's what they're excluding. So this is, if you like to pause, I always produce this chart in all my videos. I know it's been a few months that I didn't produce the video, so I apologize on that. There was a personal reasons, but please pause this chart and take a look that we have June, July, and August, and how the inflation travel. And like I said, inflation being easing as we continue moving forward. The first quarter of the 2024, obviously the inflation was kind of uptick and then started gradually again going down. So hopefully stay that way. So the producer price index year over year and core producer index year over year. Reason why we review this, because if for producer it costs costly more to produce the items, eventually will be spilled over to the consumer. So that's important to understand that consumer, the producer price index year over year is 1.7%. And core producer price index is 2.4%. So you have to, guys, understand, like, inflation's still here. It's not like, oh, now we're going in disinflation. No, we're still, the inflation is here. It's been here in 2024. It's been here in 2023, of course, 2022 and so on. But all of these numbers is represent inflation. It's how the inflation is rising, but rising slower. So like for example, in June, the inflation was going up in a rate of 2.7% year over year. So now it's 1.7%. And you can see also on this chart. So if you look in month over month, it's again, the inflation is here. Like you see here, like when we see actually minus 0.3, that's we have no inflation at all. It's negative. But anything that you see in positive, so inflation is here, it's just grow in a slower pace. So PCE. So PCE is a personal consumption index. It's actually the most preferred edge for the inflation for the Fed gauge. And this is something the Fed pay attention to all the inflation indexes, but this is one of the preferred gauge for the inflation. And you can see that that's been increased year over year, 2.2%, and core increased slightly to 2.6%. Again, target is 2%. So PCE month over month, 0.1 and 0.1 on the core as well. So personal income month over month. So month over month, personal income actually rose by 0.2%, and personal spending is 0.2%. Why is important to understand? Remember, we was talking about like the personal income, like let's say last month. So think about your personal income rose by 0.3%, but your spending rose by 0.5%. So you're making less, but you're spending more. So that's also is interesting to understand the consumer health and consumer behavior. So retail sales rose by 2.1% year over year, 0.1% month over month. It's also I always keep tracking this information because it's a part of understanding the consumer health and how our economy is traveling through the time. Non-farm payroll. So this is something that I watch for most of the parts, all the federal Jerome Powell special meetings. And he's concerned now that our growth jobs is a little bit on the weak side, and then the last speech that he has is basically where he says that they just don't want it to get worse. it's not says, oh, we're going in and to fix right now everything. No, we just don't, we lower it by 50 bps points because we don't want it get worse. Now, my opinion, do you agree with him on 50 basis points? I don't know. Just for some reason, I thought the reaction of the market and around is would be different for me personally. I don't really see that much difference in this 50 base points that it's been lowered. And again, the lowering the rates or raising the rates, it's very lag effect in the economy. You're not going to feel this right away. So that's we'll see. Like my biggest fear, honestly, like I just afraid if will be really get back the inflation. Will be because lowering the rates is always inflationary. And the data that is coming in, like it's interesting because some data is very weak, some data is like okay, and you will see like corporate profits, it's like almost double with projection, and it's just the data is very mixed. And I personally do not believe all the data that is being presented. Like they come in and say, well, we overestimated over like, I think it was like 818,000 jobs for this year, overestimated. I mean, how you can overestimate it, such a large number? I mean, again, that's just my personal opinion. So unemployment rate actually went down to 4.2%. This is where we at, and actually we below average. I will show to you on a different chart as well. The job creation was 142,000. The government payrolls 24,000. You can take a look what that creation was for the past year. The manufacturer actually we lost some jobs. And non-farm payroll private we had as 118,000. So average hour earnings year over year is went up to 3.8%, and month over month is 0.4%. The initial jobless claims and continued jobless claims, you can take a pause and review. I have all the dates and what the jobless claims. It's interesting to track these numbers. This is numbers comes quite often through the month, and you can see breakdown by the weeks. Because that's what will spike the unemployment, and see how, those numbers just very deviate from each other or they come on a steady pace. So let's talk about some housing data for the United States. Now, if you do like to have a local Southwest Florida market report, I will attach the video at the end of this video, and that would be for a third quarter of 2024 for the Bonita Springs, Naples, Marco Island, and Estero. So stay tuned. If you like to watch, please click on that link after this video, and that would be available for you. So the S&P Case-Shiller Home Price Index, that's basically taking 20 larger cities and home prices index, and it says that in those 20 larger cities is actually rose by 5.9%. And month over month is actually at 0. So you have to understand, like you look at all this data, it's good to understand this data, but every market is very unique throughout the country. And some markets we definitely still, believe it or not, in sellers market, some market we in neutral markets, and some markets we definitely in a buyer's market. So again, stay tuned for that video for the Southwest Florida market report if you are curious what's happening in your neighborhood. So the building permits actually rose by 4.6%, and the month over month is actually, so the building permit month over month in the United States increased to 4.6% in August, and this was from a negative of 3.3% in July. The housing starts, that's the think about the building permit, the builder go to the county, pull the permit, say, okay, I'm ready to build this house. So housing starts is like the house in progress. It's already on the ground, right? So, and that soared in month of August by 9.6%. For the for the month of August, and you can see it's 1.356 million units in the August of 2024. That's break the ground and ready to go. So if we take a look at new home sales, so the new home sales actually declined by 4.7%. So the new home sales, it's the homes that already exist and they are available to sell to the consumer. So that's actually declined by 4.7%. And this is from being up 10.6% in July. So if we take a look pending home sales in the United States, you can see that they actually in the month of August, they declined by 3%. And you can take a look throughout the year, they've been actually on decline except the December. And the pending home sales month over month is actually a little notch on up at 0.6%. So existing home sales, it's those ones that it's sold, is fell by 2.5%. And you can see it's 3.860 million units in the August of 2024. And it's fell by 2.5%. So house price index year over year is 4.5%. And average prices of single-family homes with mortgage guaranteed by Fannie Mae and Freddie Mac in the United States increased by actually 0.1%. So the mortgage rates, so you can see kind of like how they've been all over the place, but the mortgage rates on the contracts for the 30-year fix with confirming loan balances 766,550 is actually edged by 1 BPS point, and this was the week ended September 27th. So you see, guys, this is already after the meeting. So they've been at, like, I thought they will go down. Personally, I thought the bonds will rise, the yields go down, but I was really surprised how market really priced in this 50 base points cut. It really did. So everything being priced in. So that's why you don't see this huge mortgage rates going in down, and because everybody priced in this cut. That's really my personal opinion. So you can see this is of the week of October 2nd. You can see that the 15-year increased to 5.16, and the average on the 30-year is increased to 6.12 on October 3rd. That was the data. It's actually today. So this is interesting, actually. So they revise a few things. So they actually revise the gross domestic product in third quarter. Corporate profit also been revised, in GDP by industry second quarter of 2024, an annual update. It's interesting. It's revised for higher, is 3.0%. Like I said, when you look some parts of the economy, like, oh, wow, I mean, we're doing really well in some parts. In some parts, you're thinking like, okay, that's kind of interesting. We really, like, my opinion, we're really walking on this tight rope. Are we going into this soft landing and go to the moon? Are we going into recession at some point? I don't know. It's interesting. So the yield curve been uninverted at this point for a few months now, and what I mean by that now is a two-year yield is actually lower than 10-year, and obviously 30-year as well. So that's, and before we had, since I believe, gosh, I think it was like 2019 or so, there was a 2-year higher than the 10-year. So the term rates was higher than the long term. And now it's reversed, which it should be. So this is the revision what they made, actually. So they did upgrade, they did revise the GDP for the second quarter to 3%. And interesting enough, I will show to you on a different chart. So remember that we talked about in 2022 in the first quarter, no, sorry, in the second quarter of 2022, we said that we're in recession because we were in negative territory for two consecutive quarter, which is definition of the recession, right? I feel like we're in recession now, but anyway, that's a different story where I feel. But anyway, so they did revise. And you can see light blue, that's original, and dark blue, that's actually revision. So they did revise, like, oh, no, we were positive, we were 0.3, we're doing good. So technically, we've never been in a recession. Okay, so that's a revision that they made. So they made revision for the second quarter of 2024. They made revision across the board. You can see that, but including that we were no longer in technical recession because the second quarter of 2022 used to be negative. Now it's 0.3% positive. So that's the last chart actually I would like to share with you. I hope you enjoyed this video, and I hope you found this video helpful to you and to your family. If you do, please don't forget to subscribe on the channel. And if you do like to take a look the third quarter for the Southwest Florida real estate market update, please don't forget the video will be at the end of this video. My name is Anna Eckstein, Naples Ultimate Luxury Group, Realty One Group MVP. Thank you for watching, and see you next time.